Today I'll be showing you how I would invest $1,000 in a risky way, in a medium risk way, as well as in a safe way. But just note that the risky way, you're going to get the greatest returns. The medium risk one, you're going to get medium returns. And the low risk one is a fairly low return, but still it's better than nothing. What's up you guys? My name is Daniel and this is my dog Taika right here. Welcome back to the Fire Grind. On this channel, we usually focus on the stock market, but today we're talking about personal finance, and I'm going to show you how I would invest $1,000 in a high risk way, a medium risk way, and a low risk way. The reason why this video is for people under 30 is because when you're under 30, you're usually at the age where you're ready to hustle. If you're over 30, you typically are probably married, have some kids, and not much time on your hands. So some of these methods require a bit more time and also a bit more risk. And for people under 30, they tend to have less than $1,000 in savings or are on the poorer end of society because they haven't had as much time to pay off their student debt as well as build up capital from their job. So let's get started with the riskiest way, because those of you who are sitting there right now are probably wondering, how can I turn my $1,000 into $2,000 or even $10,000? And no, it's not penny stocks, because that's probably the worst way that you could do it, and I personally wouldn't do that myself. But this method that I'm going to tell you about right now, this is something that I personally do. I do that right now even though my net worth is over $1,000, and it's a great way just to flip small amounts of cash. So this way is essentially just buying and selling products. And at this point you might be ready to click off, but wait. Let me show you how I would buy and sell products and what products I purchase and sell right now. So first, we have to find a product that we can buy for a cheaper price and sell it for a higher price. So right off the bat, if you guys have seen my Shopify video, you know that I sell massage guns right now. And let me tell you how this business works and why I found this product. So one day I was actually at the gym, I was playing volleyball with a couple of friends, and one of my friends had a massage gun in his hand. And I was like, this is a neat tool, like what do you use it for? And he told me it was a massage gun and he showed me how it worked. And basically all it does is you turn it on and this head at the front will vibrate. So it kind of sounds like this, and what you do is you place it on your dog or yourself and it'll massage your muscles. Usually she's pretty scared of this, but you know, maybe because she's sitting in my lap, she's okay. I use this sometimes to defend myself against her because she gets pretty feisty in the morning. But how I found this product was through my friend, and I saw that this was a business opportunity because not many people knew about it. And I know in the sports space, people are always looking for new things to try out to help heal their pain or help them recover quicker. So I decided to search on Amazon to see how much these were selling for, and they were going from anywhere for $100 up to $200 on Amazon. And then I went to my favorite website called AliExpress. And for those of you who don't know what AliExpress is, it's basically the Amazon of Alibaba. You can find just about anything, but their shipping times are extremely long. Sometimes I waited for products from AliExpress for up to 60 days. But I found massage guns on AliExpress for around $70 to $90 Canadian. So what I did was I clicked the buy button on this massage gun, waited for it to come in, and then posted it on Facebook Marketplace. And within a couple of days, I sold that massage gun for $120. So I turned my original $70 to $90 into $120. And I continued to do that more with AliExpress, but realized this was a very slow way to grow. So I went to Alibaba, tested out a few suppliers, and ended up with this gun right here. So I'll be transparent with you guys. The cost basis for one of these units right here is under $70. And I flip these for $120, $130, $150, depends on what people are willing to pay me on Facebook Marketplace. Also, I started a Shopify store. If you guys are interested in just checking out that website, you can check that out in the description down below where it says Leave Gun. So with this method here, if I invested $1,000 into it and I bought off of AliExpress, I could buy anywhere from 12 to 15 massage guns. And I flip each massage gun for a profit of around $40. So that's $40 times 15, which equals $600. So by putting in $1,000 and buying about 15 massage guns, I could earn a 60% return within a few months. So this is a high risk way of doing it if you're buying and selling products, because you also have the risk of what if this product doesn't sell? Then you end up with a product on your hand that you can't sell for anything, or you sell it at a loss. So this is where the risk comes in, because you have to put your money up front and you don't know what the market's like. But a trick here is you can fake post on Facebook Marketplace without the item and just see how much demand you generate. If there's a lot of requests for this product, then go ahead, click that buy button and watch the money roll in. Now let's move on to the medium risk one. So this medium risk investment is essentially what I preach about on this YouTube channel. However, it's more of an autopilot way for those of you guys who are lazy. So essentially all you have to do for this method is throw your money into an S&P 500 index fund, and you can roughly expect to see a 7% return year over year if you invest for at least 10 to 20 years. If you're investing in the short term, the S&P 500 is probably not what you're looking for because you could be investing at a market high or at a market low. You really don't know. And if you're investing at a market high and the stock market tanks for the next few years and takes a while to recover, then you might see negative gains or just break even. But if you've got at least 10 to 20 years before you need this cash, then the S&P 500 is pretty safe. And you can take a look at the history of the S&P 500 as it has more than 30 years of history. And also the general stock market, if you guys look back all the way to 1929, they say the average returns are anywhere from 7 to 10%. So if you're under 30 right now, looking to retire when you're around 60, you've got 30 years on your hands, and if you hate finances, just throw your money into the S&P 500 index fund and do this every single month, every single week, whatever cadence is best for you. But don't just invest once because who knows, you could be catching the highs or you could be catching the lows. That's why dollar cost averaging is your best friend. And for those of you guys who are confused by dollar cost averaging, it's basically what I suggested to you a couple seconds ago. By investing money at a certain cadence, whether that be weekly, monthly, bi-weekly, or even yearly. And the reason why I put this as a medium risk is because in the short term or medium term, you are going to see risk with this investment. You're not guaranteed a return. And it's as I said before, you could see the markets drop in the next 5 years and not recover because that's essentially what happens when there's a recession. Usually in a recession, the market tanks about 30 to 40 or up to even 50%, and it takes around 3 to 6 months for that drop to happen. And if we look back at year 2000 or year 2008 when we saw the last crashes, it took them about 5 years to recover back to its previous all-time highs. So if you invested at the all-time highs just before a stock market crash, expect it to take at least 2 to 3 years before the market recovers and you break even again. And there's no predicting the market, so that's why I say in 10 years it's pretty safe because over a 10-year period it's never really failed except for back in like 1960s or 1950s. That era is kind of long gone right now. And I think the economy really has changed with technology and all that, and we're able to constantly grow as a society. But yes, stock market returns are not guaranteed. So that's why this is ultimately a medium risk. And now let's go to the safest investment that you can make. And this is a lot better than a checking account and is just as safe as your checking account and even safer than your piggy bank because who knows, someone could come into your house and rob it tomorrow and all your money's gone from that piggy bank. So this low risk option is basically finding a high interest savings account. And what this is, it's like a bank account, like a checking account. However, there may be a little bit more restrictions in terms of how many withdrawals you can do. It really depends on the bank that you do it with. And what's different from this high interest savings account and a checking account is essentially you get more interest with a high interest savings account. So for example, right now I'm using EQ Bank and I get 2% interest over 1 full year. So if I invest $10,000 into my EQ Bank account, I should expect to gain $200 over the full year. But the amount is going to be a little higher than $200 because it compounds. So every time I get paid interest at the beginning of the month, then the next month will pay interest on that interest. And that's the whole compound interest effect. And if you guys are interested on this compound interest effect, you should go search it up on Google or on YouTube because it's pretty interesting. And essentially that's how we as investors grow our money. If you guys want to join EQ Bank, just note that in August they're actually dropping their interest rate down to 1.7%. But you can sign up down below in the description because I have a link there that will give you $20 if you sign up today and deposit $100. And this is the highest interest that I could find on a high interest savings account. Tangerine currently offers around 0.5% interest. All the big banks offer 0.25% interest, which is basically peanuts. And Wealthsimple Cash offers 0.9%. So EQ Bank by far is the best high interest savings account in Canada right now that I know of. And also it's fairly safe because it's backed by Equitable Bank, which is a larger bank that has some sort of financial mass. Your account is insured up to $200,000. So for those of you guys who are watching right now, you probably don't have $200,000. So if EQ Bank somehow goes bankrupt, you'll be able to claim your money back from insurance and sleep happy at night. If you guys want to know how I use EQ Bank and just see my account on there as I did deposit $19,000 into it, you can check out this video right up here or I'll link in the description down below. It's a whole walk through the platform to show you what it's like, and this is a good idea to watch if you're interested in using EQ Bank. If you guys are doing any sort of business, entrepreneurship, or investing, let me know in the comments down below what your returns are and what you guys are doing, because I'm always interested in other ways I can increase my income, especially those with little or no effort. Keep up the grind and have a great day.